what's going on, everybody? My name is Justice. Welcome to the channel. Welcome to my very first video on this channel. This is just a space where I wanted to come and be able to document my trading journey so far. I have been trading for almost 2 years now, about a year and a half, a little over a year and a half. So I'm still pretty new. I'm still a beginner. But like I said, this is just a place where I wanted to be able to document my journey for myself, and as well as for anyone else who may be still questionable when it comes to trading in the markets. And I wanted to be able to have this where people could learn from me, ask questions, obviously, and overall just where I could go back and refer to my process and my journey so far. I look forward to growing this channel with you all, and I look forward to meeting some of the traders that are in this market, or anyone who's just looking forward or wanting to get into this overall kind of community. So yeah, later on I will drop a video about who I am, my background, a little bit about my family, relationships and things like that, my fiance, and what I like to do outside of trading, but that will for sure come a little bit later on. But other than that, I don't want to prolong this intro too long. I hope you all enjoy this video. If you do, leave a like and a comment, and other than that, let's just go ahead and get right into this video. So as you read in the title, I'm going to be going over the power of three. I thought this was one important concept to use that I've recently found that's helped my overall trading journey so far. It's helped me to be able to look at the markets in a completely new perspective, whereas before knowing this concept, I was kind of just, I'll be honest, I was just iffy. I was guessing. But like I said, since learning about this concept, it's definitely helped me to be able to look at the market in a completely different way. I just want to say that I'm not a financial advisor, and I hope that this analysis will be able to, open your eyes or help you in any sort of way in your trading journey. But however, if you still feel a little bit iffy after this video, then I would definitely suggest you going over to the Inner Circle Trader, which is where I pretty much got this concept from. And I'm pretty sure after looking at some of his videos and some of his models, courses, and things of that nature, you'll definitely have a better, broader, more in-depth understanding about the power of three. So now, after saying that, the first thing that I wanted to go over was going to be the first step of the power of three, also known as AMD, which is accumulation, manipulation, and distribution. So the first step in that is, for me, is what I look for is accumulation. And if you read any, looked at or saw any sort of chart, you most likely know at this point that the market moves in waves, M's, W's, ups and downs, however you want to look at it, it moves in waves. So for me, when I'm looking for accumulation, which is also known as consolidation, it's pretty much how I like to look at it, is when price is accumulating liquidity, both buy side and sell side liquidity, or when people are entering and when they're buying and selling, when they're entering and they're exiting the market. That's how I came to grasp it. So for me, what that looks like is, you may see where the market does something like this. And as like I said, it forms both buy side liquidity and sell side liquidity. So right here is where your buy side liquidity will be formed, and down below is where your sell side liquidity will be formed. So after having that first confirmation, what I then like to look for is for liquidity to be swept either to the upside or to the downside. And that, for me, that solely depends on what my overall higher time frame bias is. And for those higher time frames, I like to look at both the 4-hour and as well as the daily. Those are my main two. Those are the ones that I've been looking at, the 4-hour and the daily, and as well as the 1 hour. Occasionally, sometimes I do like to, I will go up, and if you say, I'll look at like the weekly or the monthly, but majority of the time I look at the 4-hour or the daily. And so once I have that bias, so let's say for this example, we are in a bearish bias. So we're looking for I will be looking for sales. So again, once I have that accumulation form, once I have the liquidity form, once I see where liquidity has been, pretty much built to the upside and to the downside, since I am in an overall bearish bias, or since the trend is, I think it's gonna sell, the next thing that I will look for is the second step, which is the manipulation phase. So again, since I am bearish, I will be hoping to see where price would reverse right here at this point, or somewhere in this area, and go back up and completely wipe out all of this right here to the left hand side, all of this liquidity where people have put their stops right here. So just an example, this could look like something like this, where again price will go up, and it would, majority of the time, most of the time it'll may close above that. It'll close above that, form a wick. I love to look for a wick, because that, for me, that just signifies where if price left a wick where it's kind of exhausting its momentum to go towards the upside, which is a big confirmation for me personally. So whenever I see the wick and where it's taking out, these people over here are just taking out this liquidity right here. Once I have those first two confirmations confirmed, the accumulation phase right here, and as well as the distribution phase, I'm sorry, not the distribution, the manipulation phase, then I would like to look for distribution and look for an overall entry. And again, for this setup, since my bias is bearish, I will be looking for a sell here. So once I've seen where price has taken out this liquidity right here, and it's, for me, where it's left a wick, then I will be looking to enter in somewhere around this area. Now, I have seen other traders who are a lot more confident in the markets than I am, and they actually enter in right once the wick is formed. Me, however, like I said, I've only been trading for for going on about 2 years now. I feel that my entries, I'm a lot more confident in my entries waiting after it's formed that wick. So instead of me getting in right here, I would more than likely wait for it to come somewhere in this area right here. That's just me. Now, I have taken entries before right up here right when it's taken out, right when it's swept the buy side liquidity. But again, personally for me, I just felt unease most of the time. So until I had come to a come to terms with me getting in higher, for my psychology, I do prefer to get in again right here in this area. But if you are confident, you can always obviously get in right here and be in earlier and have a better position than this right here. That's totally up to you, obviously. But again, for the sake of this video, I'm just sharing what I do. So once the market has came up, taking this out, and once it reverses, I'm waiting for it to reverse. Instead of me getting in right here in this area, I will look to enter in the market right when it's broken this area right here where I have this line at right here. And then once it's broken that line for me, usually it just completely distributes down to the down below with force and with a lot of momentum. And for me, I just found that is a lot easier as far as entries, because I'm not at that point, I feel like I'm not predicting or trying to predict what the market is going to do, or guessing or gambling in a sense, but I'm reacting off of what price is doing, and as well as time has a big factor on when and where I take my entries as well. But that's helped me here recently, like I said, in the past. So yeah, so again, just to kind of recap, the first thing that I would like to do is I wait for accumulation to form, which normally will look something like this right here. And then once that has formed, the second thing that I typically look for is manipulation to take out whatever a liquidity is resting above or below. Again, since this scenario I am bearish, I will want it to take out whatever liquidity is resting above. And then once that has been done, I typically wait for a wick. Once that wick has formed, I will get in again around this area. And like I stated before, you can by all means get in and have a way better entry up here. But for me, I feel more confident. I don't feel jittery. I don't feel, I have a lot of anxiety as far as like my entries when I get in right here. Hopefully sooner or later, I'll be able to build up the confidence to where I'm able to take a better entry, which will be right here in this area. And then after that, price usually price usually goes right down in my favor. And that's, like I said, that's just has worked for me here recently. Because I'm not gonna lie, honestly, before, like I had mentioned earlier, I would just feel like I was kind of like all over the place, or I was just like guessing. So after knowing or going over this concept, I've definitely been able to kind of see the markets and price a lot better and a lot easier. The last thing that I wanted to kind of go over real quickly is let's just say if you miss this move right here. So if you were to miss this first entry right here, you could always wait for price to reverse and go back up. A lot of times it will, and that'll kind of look something like this. And it'll go up somewhere usually around in this area right here, and then it will reverse. Now to do that, I know a lot of traders like to use is the Fibonacci retracement tool. They'll place that right at the high and the low of the current range, and wait for price to kind of revisit or touch those previous areas where we were looking to initially sell in. And then once it has done that, it gives traders or other traders a lot of more confidence and more confirmation rather on getting in for the second entry. I will do a video a little bit later on. I plan to do a video a little bit later on my fib retracement settings, and kind of go over that with you all. But for me, what I typically like to just really hone in and kind of focus and try to hope to, Lord will look to get in on the first entry rather than the second entry. But like I said, that's always just another option for you if you miss the first entry, or if you just feel like you just want to get back into the trade. But I think that's all that I have for this first video. I hope you were able to, just if you didn't already, if you learn or kind of get a better understanding or grasp of the power of three. Like I said, it's really helped my trading so far. And again, if this video wasn't that clear for you, I would definitely recommend you going over to the Inner Circle Trader and just looking at a more in-depth. He goes really, really in-depth and way farther in on that overall concept. But I hope this video wasn't too all over the place for you. I hope you were able to just kind of be able to see my take on it and how I like to fit it into my trading. So yeah, other than that, like I said, I do look forward to this journey and documenting everything along the way. And I will release another video shortly on kind of my background, who I am, and things like that. So yeah, I hope you all have a great rest of your day. And if you did like this video, please just do me a favor by giving me a like, drop a comment down below. That always helps. And subscribe if you want to go on this journey with me, and if you are just interested in seeing where this channel goes and where my trading journey goes. So yeah, I hope you all have a great rest of your day, and I will see you on the next one.